right. Good morning, you magnificent melonheads. Happy Tuesday morning, everybody. I must warn you, I am not a morning person, but we do these morning live streams anyway, mainly for the benefit of you folks in Europe and you folks over in the Pacific across the world. Try to spread out my live streams so I don't just do them while you guys are sleeping. I want to give everybody a chance to talk and to send me questions live. So here we are, Tuesday morning, and the market melt up is continuing. Stocks defying gravity, shooting straight higher this morning. They've been doing that really since that less than expected inflation report came out last week. On the move, there's just been so much cash parked on the sidelines. So many people, self included, were sitting in cash waiting. And I have not deployed that cash, but a lot of other people have deployed that cash after they got that inflation reading last week. And well, it's just piling in and it's sending prices higher. Meanwhile, we've got the dollar is weakening as people are expecting a more dovish Fed in the near future. Weakening the dollar. Well, the dollar is the denominator in the pricing equation. So a weaker dollar means higher nominal values for assets. And we've seen it in pretty much everything but oil. We've seen it in gold, in silver, in grains, stocks, bonds. I guess not real estate, certainly not crypto. But really asset prices being buoyed right now by the weaker dollar. Now, this morning and yesterday, we got some very interesting retail data. And we're going to talk a lot about that today because even though we've got this low dollar melt up thing going on in stocks right now, at the same time, the economic data, the underlying economic data, folks, it is so bad, so bad. And the two can coexist, right? And that's going to be one of the takeaways here. You can have this macroeconomic CF that is going on with the data, and it's terrible. It is just god awful. We'll talk about some of these things. And at the same time, stock prices can go higher in the short term. The two things can happen. We're watching it in real time. All right. They're not mutually exclusive, but I can tell you, you dip buyers out there, I am not among you. I am not buying this dip. This money is going to go up in smoke. All right. The algorithms are driving right now. They're taking stocks higher. They're hitting buy points and up we go. At some point, the bottom is going to fall out. This melt up cannot go on. And we have seen some spectacular bear market rallies in the past. We saw one over the summer. We could be into one right now. It's not real. It is not real economic data. There is no underlying strength. The economy is not strong as H. Come on, man, says the big guy. No. We are going to say hello to my man, Mish, the molecular. What's going on today, Mish?
Yeah, I'm the molecule today in support of my daughter, who's a molecular biologist. She's going to school. But I do want
brains in this family amaze me.
Yeah. So I do want to congratulate you, Jack. You had a 2 million view video in Twitter.
Yes. I don't know if you knew this, but I'm kind of a big deal. Much like the great Ron Burgundy. I have many leather-bound books, and my office smells of rich mahogany. Awesome. Thank you. Yeah, we had by the way, welcome to all the people who came to the channel from the FTX video. Thank you, guys. This will not be a short and sweet and rapid fire to the point like the FTX video. Please stick around. But during our live streams, we do a little more back and forth. We get into things in a little bit more detail. We do a little bit more analysis. I was getting so long in the tooth with the FTX story last week. Mish and I did a spontaneous live stream on Wednesday. We had done a pretty long video about it beforehand. So our FTX coverage was getting like hours deep. And I know when people log into YouTube and they look at their subscriptions feed and they see videos with an hour timestamp on them or 50-minute timestamps, I know how daunting that can be. I know how pressed for time people are. So I wanted to say, like, let's distill this thing down, Mish. I want to tell people I value their time. So let's bang this thing out as fast as we can. And then if people want to know more, they can come to the channel and they can see some of the other videos where we stretch it out a little more. So this, experimental format was born, and well, it was very well received, especially on Twitter. Nearly 2 million. Did it actually break 2 million on Twitter?
I'll check real quick.
It was 1.9. Yeah. It was 1.9 million for a while on Twitter, and then YouTube picked it up eventually. It got about 200,000 views on YouTube, which that's more views than my channel usually gets in a month combined. So, yeah, it's been a nutty couple of days. got a lot of emails, a lot of really nice messages and feedback, people. So thank you, everybody, and welcome to the channel if you are here from that video. And speaking of that video, let's real quick talk about what's going on right now, because I was having a conversation with my parents last night. They're here visiting. They're in the next room watching the stream on their devices while I go. We're going out to breakfast afterwards. Hi,
Hi,
Mom.
Mom
Hi,
and Dad.
Dad. Hi, Mom. Hi, Dad. I love you guys. So I was saying last night to my dad, the only reason this guy, SBF, the only reason he's not in handcuffs already is because they don't want to let this crisis go to waste. He's already committed dozens of felonies, wire frauds, misappropriation, embezzlement, you name it. He has stolen so much money. He has committed so many already crimes. This guy should be in cuffs already, and he's not. Why he's not in cuffs already? Because if they arrest him, if they perp walk this guy, then the average person is going to say, well, justice was served. He's in jail. Good. On to the next. And the story will lose momentum. But then they can't ram through their regulatory framework and their new legislation that gives the government control over it. And so this guy's walking around free. He's in, I don't know, is he in Argentina or the Bahamas? He sent his plane to Argentina, and Caroline Ellison ran to Dubai. Oh, my God, they're going to eat her alive in Dubai. Oh my God. Again, I can't wait for this movie to come out. But I got to send a shout out. I've mentioned Dylan LeClaire's Twitter feed a couple of times on this channel already because this guy has been all over this story. Some of the most fantastic coverage of the FTX fiasco and the widespread fraud in decentralized finance and crypto. Real quick, I want to distinguish between crypto and Bitcoin. Two different animals here, okay? We're watching the death of DeFi and the death of crypto. We are not watching the death of Bitcoin, although Bitcoin's price is being dragged down with it. I remain bullish on Bitcoin in the long term, even though ultra bearish in the short term. But he wrote this today, and this is a fantastic tweet. Every day SBF is not behind bars. It becomes increasingly clear he's served as an asset for the intelligence establishment. We're getting tinfoil hatty here, folks, and that's okay. Used to severely stain public perception and impose overreaching regulations. The meteoric ascension, the political connections, the anti-proof of work stance, Fed. And when I saw that last word there, when he says Fed, I couldn't help but think of Harold Ramis in Airheads. I don't know if you guys have ever seen a movie, Airheads. It is such an underrated movie. But in that scene, Harold Ramis is pretending to be a record executive, and he comes up to the door, and he's talking to the band, and they're trying to see if he's a cop or not, if he's trying to sneak in and secretly arrest him. And they say Van Halen or Van Hagar? And Harold Ramis says, Hagar. And they all say, cop, and they slam the door in his face. So that's what reminded me when I saw Dylan LeClaire say Fed in this tweet this morning. I immediately thought Harold Ramis, Airheads. Awesome movie. Check that one out, folks. And he's got one more tweet here. Go ahead, Mish.
SBF was out trying to raise funds over the weekend.
Oh, sure. Well, take my money.
Funds to cover all the creditors. He may have up to 1 million creditors.
Well, we know he does, right? There was over 1 million FTX customers, and their funds are frozen. So if you had creditors, right? But if you had coins on FTX, you thought you owned Bitcoin, but really you were an unsecured creditor of FTX. So yeah, more than 1 million creditors. And Alameda in their Chapter 11 filing listed over 100,000 creditors. So who do they owe? Everybody. They owe everybody money. And nobody's going to get it back. Pennies on the dollar, and it's going to take you years, if at all. Look, the Mt. Gox coins are just now getting returned to people. That was what, 2013 was the Mt. Gox fiasco? This is going to play out in court for years. Get some popcorn, folks. And I want to just mention another tweet from LeClaire. This guy, again, his coverage of FTX, you should be following him on Twitter. He's excellent. He says, it really does speak volumes about the goals of the powers that be when none of the crypto frauds are behind bars, but the Tornado Cash developer is. And I did a video about Tornado Cash. Tornado Cash was a mixing app, and some of the more seasoned crypto veterans out there could probably do a better job describing it than me. But Tornado Cash was a way to put your money into this app that made it untraceable. because everything you do on the blockchain is forever a record. All right. And I want you to think of every transaction you've ever made. All right. Maybe you went to a doctor for something a little weird, or maybe you bought something naughty for Valentine's Day, or who knows what, right? Guess what? It's none of my business. It's none of anybody's business but yours. And what Tornado Cash does is Tornado Cash blurs those lines so that on the blockchain, you can't trace every single transaction to an individual. It hides transactions, all right? It's privacy, financial privacy. Now, this also enables bad actors, right? Criminals are able to use it to hide their funds and to embezzle funds. I'm not arguing that that's not out there. But, you know, criminals use cash too, don't they? Criminals use, it's not like US dollar bills or $100 bills were ever used for crime, right? But the developer of Tornado Cash, he's in jail. They shut down that application. And SBF is still a free man. He's still out on Twitter. He's still moving tens of millions, hundreds of millions of dollars are still being moved around in the FTX wallets. My God, what are they doing? They are committing felonies by the dozens every day, and they're still walking free. But the Tornado Cash developer, he's in jail. So a lot of people, the uninitiated, and if you're watching this channel, you are not the uninitiated, but a lot of people are going to be out there saying, this is why we need crypto regulations. It's the Wild West and the crooks run it. You need to tamp that down, to quote Rostin Benham of the CFTC, all right? No, that is the wrong response to this. A government takeover of crypto is exactly what SBF was trying to accomplish. He was a Trojan horse for a government takeover of cryptocurrency. Handing the government the keys only protects Sam Bankman-Fried and his ilk. All right? And if you doubt me, what do you think he was doing with those tens of millions in campaign contributions? What do you think he was doing? All right? And guys like Dylan LeClaire here, they've been calling him out for this. Keep at it, Dylan. Nicely done, sir. And by the way, folks, again, we're going to get off the crypto thing. This isn't a crypto channel, but just want to mention, I put a link down in the description to this stream, to this video that I did back in February after the Super Bowl. All right. And I went back and I watched this one last night. I didn't get everything right, but I got pretty darn close when I said the top is in after watching the Super Bowl commercials, and I compared it to the dot-com bubble. And I mentioned FTX an awful lot. And there's a lot of red flags that Super Bowl should have set off for a lot of people. A lot of alarm bells should have been ringing. So I put a link for a reason in that description down below here. When this stream is over, go back and check that one out. It's a 9-month-old video. I didn't get everything right in that video. All right. I mentioned that I was bullish Ethereum. I am no longer bullish Ethereum. I mentioned that I thought that Tether was going to be the big fraud. But I said there will be a big fraud within months. And here's why. Because they were rubbing it in our faces how they were misappropriating their investors' cash, burning millions on pointless Super Bowl commercials, terrible Super Bowl commercials. So go back and check out that video when this one is over, because it's a good exercise in the red flags that we should have caught. All right. And I don't usually do this. I don't usually link to my own stuff out there. I prefer to link to other channels, but this one is worth a second watch. All right, let's take a look at the indexes, folks. It is 2 minutes until the opening bell, and it looks like stocks have given back a little bit of their initial gains after that PPI came out this morning, but the S&P 500 right now is set to open 61 points higher, or 1.54%. The Dow is set to open 293 points higher, or 0.9%. We had a big green candle on that PPI report today. Another inflation report that was a little lower than expected, so obviously stocks like that. And the NASDAQ is up almost 300 points right now, or 2.55%. NASDAQ leading the way higher. This is risk-on behavior from the stock market. This is ill-advised, and yet it is happening. All right, I am not about to go risk-on. I don't think this is a low-risk environment by any measure. And what's driving it, folks? It is this lower dollar. And here we go again, the U.S. dollar index, the DXY, that 105.89 this morning, down 78 basis points. All right. And this is off of a high of almost 115, which was just not even a month ago. Not even a month ago. I mean, this has been a major technical breakdown in the Dixie. All right. And the Dixie, again, that is the U.S. dollar strength as measured against other currencies, not stuff. This is measured against the euro, against the yen, against the franc, the Canadian loonie, the British pound, not the Chinese yuan. So the lower dollar, higher prices. That's what it comes down to right now, folks. And let's see, commodities are also, well, it looks like a bit of a mixed bag in commodities right now. Gold is having a okay day, up about 0.1%. Silver is down 21 cents or about 1%, although silver is still pushing that $22 threshold. Silver's had a nice run over these last couple of days. COMEX inventory continues to decline. So big things coming in the silver market. I don't know when, but there are big things coming. You can't have a reduced supply without prices going higher eventually if all other things remain equal. We've got copper is flat for the day. Now, crude oil, just absolute bloodbath yesterday in oil. Right now it's at 85 cents, down another 80 cents or 0.92%. Let's look at the oil chart a little bit right now. We have kind of been in this uptrend since the September 28th bottom that I called. And, well, we broke down below that trend a couple of days ago. We had a retest, and we failed. So right now, oil is lower. I think a lot of this lower oil has a lot to do with this on-again, off-again, zero policy in China. Can we even say COVID anymore? I don't know if we're allowed to say it
I
or
think
not.
you can say COVID again. I think people have gotten off of it.
Yeah, I don't know. We probably just got ourselves a shadow ban. As soon as we get some momentum from the algorithm, let's get shadow banned again. Giselle's about to start yelling at me in the other room. I know. she's going to start yelling. But a lot of it has to do with what's going on in China, and it's hard to predict global oil demand if the second biggest economy is locking down tens of millions of people at a time, and then the next day they tell you, no, we're not going to. We're going to reverse the policy, but then the next day they put it back in. Markets want certainty, and markets are not getting certainty right now. And we just had a big report from OPEC yesterday. They cut oil demand growth forecasts as economic challenges mount. OPEC cut their demand for oil by 100,000 barrels per day next year. All right. Now, it's not a huge amount, 100,000 barrels per day, especially not when you compare that to the 2 million barrel per day production target cut from last month. But here's what I take away from this. Number one, there's two stories going on in oil prices. All right. You've got a global economic slowdown that's going to destroy demand. But at the same time, you have got this policy nonsense in the West and this geopolitical CF going on around the world that's going to cause a reduction in supply. So we've got shrinking demand, but also shrinking supply. Which one of these market forces will overcome the other to dictate the direction of price? I tend to be more supply side right now. I think the supply cuts and the geopolitical risk outweighs the reduction in global demand growth. I'm not sure it's going to play out that way. That's just the way I view it, especially in light of if things continue to deteriorate in Iran and potentially the Strait of Hormuz. That would just be a nightmare for energy prices. But let me just read a little bit of this right now. OPEC on Monday cut its forecast for 2022 global oil demand growth for a fifth time since April and further trimmed next year's figures, citing mounting economic challenges, including higher inflation and rising interest rates. So this tells me if they're cutting demand forecasts, this tells me that another production cut is more likely on December 4th when OPEC Plus gets together next time. And the last time they cut production, we had a big boost in oil prices. If we go back here, October 5th was the last time they cut production. That was back here. And, since then we had prices run pretty high, although they've come back down in the last couple of days. We'll see. We already failed one retest. We'll see if we break back above this line. But keep an eye on that one, folks, in the oil market. Okay, I wanted to talk a little bit to you guys about what's going on in retail because there's some couple of really big stories these last couple of days in retail. First, let's start with the big one this morning. All right, everybody's talking about this. Walmart raises their outlook as grocery boosts sales and inventory glut recedes. All right, Walmart reported their earnings this morning. It was an earnings beat, and more importantly, they raised their guidance for this year. All right, and raising the guidance, that's what's taking the stock higher. If we take a look at their chart right now, let me refresh this one. Walmart right now is up almost 6% at 146.38. So Walmart stock's having a really good day. All right, now here's why I don't think this really matters. Because look at what they're saying in the headline. Why did they raise their outlook? Groceries. Groceries boost sales. They're not selling TVs. They're not selling big ticket items. They're not selling home furnishings. They're selling groceries. People are doing their food shopping at Walmart. Does that strike you as a healthy economic indicator? Doesn't, not to me. And I was sorting through this story, and there was one, I had it highlighted, and then I had to highlight something else. Where is it?
What are you looking for?
Hang on. I had the story. There was one paragraph. It was really good, and I had it highlighted, and I lost it. Pocketbooks are stretched, he said. People have less discretionary income or less disposable income to spend on things, so they're looking for value. They're buying less expensive proteins, such as hot dogs and beans and peanut butter, instead of pricier meats. They're waiting for sales events to buy items like TVs and air fryers, and they're spending less in the apparel and home categories. All right, so even though the top line and the headline for Walmart, right, an earnings beat and a raise, that's good for Walmart stock. But if you look at where the spend is, Walmart is getting all of this boost in earnings from food spending. Food prices are rising. People are doing their food shopping at Walmart instead of more expensive places. This is not a healthy indicator for the economy. This is not a very good indicator for the Christmas shopping season, because I don't think people are going to get hot dogs in their Christmas stocking, although, to be honest with you, I wouldn't mind hot dogs in my Christmas stocking. It actually sounds delicious to me. I'm a simple guy. But let's move on, shall we? This story from yesterday. And this was one of those whoa moments yesterday, and there was two of these yesterday. Amazon reportedly plans to lay off about 10,000 employees starting this week. Amazon's planning to lay off approximately 10,000 employees in corporate and technology roles beginning this week, according to a report from the New York Times. The cuts would be the largest in the company's history and would primarily impact Amazon's devices organization, retail division, and human resources, according to the report. So here's the thing. This is the time of year when Amazon is usually hiring hundreds of thousands. They're ramping up hiring ahead of the Christmas shopping season. They're cutting employees right now. When I saw this story yesterday, this is bad. This is so bad. Amazon should be ramping up. And I got to send a shout out to my buddy Brian Zarb from thetechnicalchartist.com. Check out Brian's website. I'm sorry, I forgot to put a link in the description. But Brian tweeted this one out this morning. It's actually a retweet from Didi. Brian's one of those guys. He's always sending me links. He's part of this intelligence network that the channel has growing right now, where people are sending stories all the time. Thank you, everybody who does that. You guys on Discord, thank you for everything you do. Thank you, Mish, for running the Discord, by the way. You do an awesome job over there. It's this intelligence gathering network that helps paint this picture of the economy for the channel. It really does help. And Brian does this through Twitter, along with a couple of other guys. He says the only transitory status out there is the following: the labor market is strong. Obviously, I harken back to the transitory inflation narrative of 2021 that fell flat on its face. And I think this strong labor market narrative is about to fall flat on its face also. Check out what Didi tweeted here. These are all the layoffs in just the last couple of weeks. Meta, 11,000. Twitter, 3,700. Intel, 20% of the workforce. Snap, 20% of the workforce. Netflix, 450. Robinhood, 30%. Stripe and Lyft, 13%. Salesforce, 2,000. Amazon, 10,000. So 120,000 plus layoffs, all in just the last few weeks. Folks, the job market, they're saying how tight the job market is and how, the Fed is trying to put people out of work. They're trying to make us poorer rather than the government taking their foot off the jugular of the economy and allow supply to increase, allow more energy production, allow more production and manufacturing. Instead, they're trying to raise interest rates and make us all poorer. Well, they're getting what they want. There's hundreds of thousands of people laid off right there. You're getting what you want, Jerome. I hope you're happy.
Well, I think someone just John Doe is just commented about how people are starting to cut Amazon Prime, and we've talked about that before. The first thing that goes in budgets are the smalls, the $5 you spend on the subscriber and Twitch, the $25 you pay for Prime. I mean, all those little things start going away.
Yeah, and there's John Doe. He says, I would never pay for Prime, just use eBay or buy $25 plus. It's a good point. subscription services you would think would be the first thing to go. Oh, there was an article not too long ago, and in the Netflix earnings this quarter, it was surprisingly resilient. That
Well,
a lot of people didn't cancel Netflix. I was really surprised to see that in the Netflix earnings. But
what I
for
think people
me, it's
miss
the first
about
thing
the
I'd cut.
Netflix earnings, remember they had that big push to stop people sharing? I think
Yes,
some of that is the 2 or 3 people that had it but shared off of one account went and got their own account.
the password sharing crackdown.
Yeah,
You think
so I'm gonna
that's
wait
what that
another
could be?
quarter on them.
Okay. So maybe we're still seeing the subscriber cancellations, but it's being brought back up by the password sharing, offsetting that. That's an interesting thought. I like that. Thank you, John Doe, for the feedback, sir. And all right, so that was the tech layoffs. But there was an even bigger story yesterday that another one of those Keanu Reeves whoa moments. FedEx Freight enacts furloughs as it faces volume decline. By the way, thanks, Dad. My dad sent me this link. He sent me this one yesterday while I was recording the video about contagion and what was it? Assets and liabilities. He texted me this video. FedEx Freight enacts furloughs as it faces a volume decline. The less than load, or the LTL, that stands for lighter than load or less than truckload, something like that, said it will bring back employees as business circumstances allow. Folks, again, this is a company, FedEx. Talk about a canary in the coal mine for the economy. They move stuff, and they don't need to move as much stuff. So this is another point for that oil story about a reduction in demand, right? Stuff isn't moving. You don't need to put fuel in the trucks. So less oil consumption. But this is another one. They should be ramping up their hiring right now. Any other year, we would be hearing stories about how FedEx plans to hire 50,000 employees to get through the Christmas freight season. No, they're furloughing employees because stuff isn't moving. So take these stories in aggregate, all right? Take the Walmart earnings, which were really good earnings, but remember, it was all in grocery. It was not because people are buying stuff. Combine that with the Amazon story, laying off people when they should be hiring. FedEx, furloughing people when they should be hiring. This Christmas season is going to be a dud for retail.
Well, I think looking at PPI that just came out is telling us that right now. Not PPI, I'm sorry. Redbook year-over-year sales. They're
All
going
right,
down.
let's look at that. Check this one out. Go ahead, Mitch. Take this one. That's a good key up.
Okay, well, let me get the screen up. Okay, so what we're looking at here, we're Redbook. What are we looking at? Redbook or PPI?
The Redbook Index. Yep.
So the Redbook Index is the index of year-over-year same store sales. And if you look at it, since August 28th, it's been on the slow decline, except for end of month. I got it. There's a little kind of up and down there, just like anything else. But if you do the best fit line, it's down at almost a 30-degree angle. And what we're seeing here is now that it's dipped below inflation, the number becomes negative because this is not inflation adjusted. So now shops are starting to lose money every week because the money they're making is less than inflation. So this
Right.
is
That's
a big deal right here because we're coming into November, which is big Christmas time, and nobody's spending.
and folks, the Redbook Index. This is same store sales growth. All right. Let me just read this. The Johnson Redbook Index is sales weighted of year over year same store sales growth in a sample of large U.S. general merchandise retailers representing about 9,000 stores. All right, so this is a snapshot of thousands of stores across the country and what their year over year sales growth has been. Now, you see their sales growth, it's all been positive, but as Mish mentioned, the key point here, these are not adjusted for inflation. These are nominal dollars. Well, remember, CPI just came in at 7.7, and we all know that number is BS. That actual rate of inflation is somewhere around 16 to 18%. And yet, if you look at this most recent number, the stores are only making 6.8% more money when the prices have risen 7.7% and realistically more like 18%. So they're making more money, but they're selling less stuff. There are fewer sales happening. And this trend is in decline. Again, this is an ugly, ugly picture for retail. Now, I just want to zoom out a little bit on this chart. If you look at this going back 5 years, all right, this is looking at the same chart over 5 years. Now, the pre-COVID, again, I hope we can say COVID now. The pre-COVID average same-store sales growth was about 5% for most of the last decade. We fell off a cliff when the pandemic hit, and then as the easy money and the stimmy started flowing, we had these big upticks, right? And they peaked right in November, December of last year, right when the taper started with the Federal Reserve, right when they stopped with the easy money. And ever since the easy money stopped flowing out, it started ticking down. Now, you might be sitting there saying, the Federal Reserve doesn't dictate what I buy when I go out food shopping or when I go to Target or to Walmart or wherever. The Federal Reserve doesn't influence what I buy. The numbers say otherwise. Statistically speaking, the Fed dictates your actions in the store. Look at the chart. All right, we had an economic calamity and the Fed set it up so you could spend more money, and you did. And as soon as the Fed stopped doing that, you started spending less money. They are absolutely manipulating down to the household level the economic behavior of the population. Free markets, fair markets are not supposed to operate this way. And you can see it here in the data. This chart is heading down. The decline is steepening. And if some of these guys are the lagging indicator crowd, if they're right and the Fed has already done the damage, but the signal just hasn't reached us yet, this is going to go a lot lower. I mean, man, if we still have 7-8% inflation and we get negative, unadjusted same-store sales growth, oh, God, talk about stagflation. That's just awful, awful scenario for the economy. So these numbers are a very big deal, folks. Now, there was one other story was today. Not as big of a story. This was Home Depot this morning. Home Depot posted an earnings beat, right? They beat expectation. Their same-store sales were growing, but they did not raise their outlook. Well, Home Depot doesn't sell food, and Home Depot doesn't sell energy, right? And they don't sell rent. And those are the only things people can afford right now. People can't really afford upgrades to their homes right now. That was last year's shopping patterns. So Home Depot didn't raise their sales guidance, and right now the market is punishing them. The stock's about flat right now. It was down a couple of percent pre-market. But Home Depot is not participating in this Walmart rally that they got this morning, even though both companies posted beats. Now, there's one other one I want to mention, and that is Target. All right, and I just want to say I have no position in any of these companies that I'm mentioning right now, including Target. But right now, Target is kind of riding Walmart's coattails. Here we got Walmart is up about 7% pre-market. All right, but Target is up almost 3.8%, riding on that Walmart wave right now. Target reports later today. I think this move does not have legs because Target has not made the successful pivot into grocery that Walmart has made. And remember this headline, all of Walmart's gains have come from grocery. People are buying their food at Walmart. People are not buying their food at Target. So Target stock is up right now. This is a bad setup for Target because I think they're getting set up for disappointment later on today. Now, I'm not trading this. I have no position in this. Do your own research and your own DD. I'm just saying they're setting up for disappointment right now. So keep an eye on that one. Target reports later today, and I suspect they're going to post a warning about the Christmas shopping season, and I don't think they're going to have the one silver lining, which is what Walmart had, is the surge in grocery stores.
I think it's important to kind of dive in a little on that. We call Target a little bougie, and we had to go look up what actually bougie meant and bourgeoisie and what it was. But, you have that concept as the economy softens, we see people going down in classes, right? You see people moving from fresh foods, Whole Foods, down into the Kroger, HEB land. You have HEB moving to Walmart. You have Walmart people moving to the Dollar General, right? So we're starting to see this in earning statements.
Yep. Yeah, and I mean, you still have some people who just refuse, the pinkies up people. They just refuse to shop at Walmart. Ooh, I'm too fancy for Walmart. I do my shopping at Target. because I'm part of the elite. Yeah, them classy Target people, you know.
Well, I think it's called Hargroves and I mean the name. Some in England, tell me if I'm wrong here, but the one where you can go in and they shop for you. Maybe it's Harris. They shop for you.
Oh my God.
People are complaining that they can't afford the people to shop for them anymore.
Oh, tell me we deserve a recession without actually telling me, Mish. That reminds me of the DoorDash thing. I saw those DoorDash earnings last week, and I just wanted to give up. Like, forget it. You know, I try to preach, I guess, austerity here a little bit. You know, I've mentioned I'm a simple guy a lot, right? Like I'm a good investor. I'm an okay investor. I'm not a great investor. Certainly, there are better than me. But the reason why throughout my life I have had so much money to invest is because I live below my means, or at least up until a few years ago, I did. I traded up and I bought a lot of house. I mean, some people laugh at me right now and they say, you know, when I say live small and dream big, people like shake their heads at me because they've been to my place before. I was like, no, like you don't get it. Like I lived in this little tiny ranch, like squeezed in this place for years, while people who made less money than me lived in bigger houses. I like because there's something I wanted to accomplish. So I've always been very thrifty, and that's allowed me to invest more money. But you know, if you find yourself at one of these places paying somebody else to do your shopping for you, you're just burning your money. You're just burning money. And hey, maybe you've got money to burn and that's how you choose to do it. You'd rather have your time. Great. I just can't imagine myself ever being in that scenario. Like, I don't want to relinquish that much control in my life.
So I
That's
think this
that's
is a
just
good
me.
point to kind of segue into taking profit since we are in kind of a melt up situation here. And we were talking about this yesterday on something that both of us have, and you can share it if you want. What
Yeah,
we
we
got.
could look at that one. We were talking about Hecla mining yesterday. And this is where the disclosure I have to make the disclosure, right? Because Mish and I both own this one. You know, Hecla, by the way, down 1.65%. And you know, we were looking at the chart in Hecla, and this one's it's had a nice little run. You know, it's below where I bought it. Mish, you're in the black on yours,
Yeah, I'm down.
but
I've got in at 450.
yeah, I got in a lot higher than there. Actually, I bought Alexco, and then you know it became Hecla with the merger. But you know, this one's got a little bit of a rising floor of support right here. It just crossed over its 200-day moving average, well above its 9-day moving average. I mean, the technicals on this one look good, and we've got a declining dollar. So that declining dollar is buoyant for silver prices and something like a Hecla mining. You know, if you've got a declining dollar, you've got rising metal prices. Well, these are levered metal plays, so these would do very well in a declining dollar environment. And then at the same time, I was looking, and it's well, look, these momentum indicators actually look pretty good right now. You know, they're high, but they're not that high. I'd actually like to see them make a new high in the RSI, just to know that these buyers still have a little momentum behind them. But you know, this one, it didn't look bad to me. I'd say, you know, I was saying that the technical indicators all look good. This chart looks great. I think it's probably going higher. But at the same time, if you never take profits, you never make any money. That's the whole point of this.
So then we had
So
that long discussion about, are we swing trading or are we going to hodl? And, you know, there's some points to be made that to get a 10x, you got to sit on it for a while. To get a 100x, you got to sit on it for a while. But if you talk to someone like M&J, who has had a certain person's course and taken it and liked it, swing trading is also an option.
oh, you could say Bravo's course. You can say she took Bravo's. That's
You took Bravo's course.
Bravo's an awesome guy. He deserves. We'll give Bravo a plug. I have not taken Bravo's course, but I would love to. I watch Bravo every day. I think his channel is hilarious and informative. And the hair.
Wait for the sales. Wait for the sales.
Yeah.
Sorry,
Yeah.
Johnny.
Wait for this. But oh, he's waiting for the sales. Anyways, I mean, long story short, I'm still holding this one. I'm not selling it. I bought Hecla because I think there's just a generational shift in the way money is viewed from this easy monetary, low rates, money printing to more of an austerity and sound money. I think it's already in progress, although we still obviously have a long way to go, DoorDash and what you were talking about. So I'm going to sit on this one for a while. Look, and I could be wrong. I think metals are going lower. I think when this sell off finally hits full steam, and we have not seen full steam in this sell off, even though we're in a bear market rally again, I think metals are going to get dragged down with everything else, and we'll be able to get them cheaper. But just in case I'm wrong, I still have my metals. I still have my Hecla mining. I'm going to sit on this one for a little while. So I guess you could say I'm hedged. I'm somewhat hedged. I'm still sitting mostly in cash, but I got my miners. I got my metals. So but that's all. We were talking about this one. All right, let's take a trip through the indexes while we're here, Mish, because the markets are open right now. So I can close the futures. And where are you hiding, S&P? Here we go. S&P had a little bit of a gap up at close. I'm sorry, a little bit of a gap up at open. It's giving back some of that right now, up 57 points or 1.45%. The Dow is up 283 or 0.85%. And the NASDAQ is up 229 or 2%. So good day so far for stocks. The melt up continues. Let's look at the indexes in aggregate a little bit more here, because first let's take a look at the Dow. All right, technically the Dow's looking pretty good. All right. We had we bounced off. We reclaimed this channel that we've been in, right? This declining level of resistance that really started all the way back in January or December. We broke through that a couple of days ago. So I wouldn't be surprised to see a retest. We also retook the 200-day moving average here on October 28th. We failed the first retest. We came back up above it, retested again, defeated on the retest, and now we've moved up above that trend line. So the Dow's looking pretty strong right here. Now we're coming up at this previous high that could act as resistance at this level right around 34,100, which not too high above where we're at. So that is the next resistance level I'm watching in the Dow. So that chart's looking pretty good. The NASDAQ, we're like right on that declining trend line right now. You could draw it a little higher. I drew the NASDAQ line right here. Now, if we were to move the NASDAQ line up a little bit to this previous peak, then you'd say we got a little while to go before we challenge this line. It's also right around the 200-day moving average. That level would be around 12,500 maybe. So the NASDAQ looks like it's got room to run before it meets any resistance. So, if there's one thing you take away from this stream, first of all, SBF should be in handcuffs already. Shout out to Dylan LeClaire. Second of all, go back and watch my Crypto Bowl commercial or video, link in the description. But the third thing is bad economic data and stocks going up can exist in the same space. All right, the two are not mutually exclusive. We can have this technical melt up in markets that we're watching in real time, even though the macroeconomic data is so terrible, like FedEx and Amazon laying off into the Christmas season. My God, that is so awful.
Speaking of macro, you want to work on bringing up the bond market?
We haven't even looked at the bond market today. Look at it. Let's see.
So
US 10-year yield.
Couple things I want to point out here real quick. If everyone looks at the 3-month to 10-year spread, it is now over 40 the wrong way.
Yep.
If you look at the 3-month to 2-year, it's only 12 basis points from inverting. I don't even know what the 3-month inverting the 2-year means.
Well, if you go by that guy we mentioned before, Jay Bravo, he has said, do you want to know when the pivot happens? The pivot happens when the Fed funds rate crosses above the 2-year yield. That has been the event that has immediately preceded the Fed pivot every time for the last 30, 40 years. When the Fed funds rate, i.e. their target rate, which is currently what, a 3.5, or I think it's 3.5 right now.
4.
Oh, did they go to 4? I should know that off the top of my head. But when the Fed funds rate crosses above the 2-year Treasury, that's when the pivot comes. Now, I have to mention that we haven't had this event into high inflation before. And you call me old-fashioned, but I still hold out hope that maybe they won't pivot. I know, call me a hopeless romantic, but I'd like to think maybe we'll learn our lesson, and that after 40, 50 years of easy money, low interest rates, and money printing, maybe we learn that bad things happen and the destruction of the middle class and the wealth gap, and all the bad that has come along with it. Maybe we'll fix it. Maybe we'll take the pain that we deserve instead of giving it to our kids and our grandkids. I know. It's probably not going to happen.
375 to 4.
It's 375 to 4. Okay. So when that Fed funds rate, which right now we'll say 3.75, when that crosses above the 2-year Treasury yield, which is 4.36, that's when the pivot is right around the corner.
So I do have a question. When was the last, and we may not know this, chat may have to help us. When was the last time the 3 month inverted the two?
The last time the
Yeah.
3 month inverted the two. That's a good question. I couldn't tell you that one.
Okay.
I could.
I take that as homework.
It would take me a while to bring that chart up. It would be a lot of dead space in the stream, so
No, that's
we're not
fine.
going to do that on here right now. But that's the summary, folks. Look, bad economic data. At the same time, stocks going up. It can happen in the same space. We're watching it happen in the same space. We're watching markets increase even as the economy crumbles. We're watching unemployment start to pile up even as stocks rise. They're counterintuitive, but it can happen at the same time. All right. But I tell you this, the reality of this holiday shopping season has not hit the stock market yet. Be very careful in these retail stocks. That's all I'm going to tell you. Be careful in these tech stocks. Kathy Wood is out there right now. Oh, I'm back. The NASDAQ is back up. All these tech unicorns. Real quick, I'm going to mention this. We will see spectacular failures, CEOs and investors, on what the end of cheap money means for tech. Don't go piling it into Kathy Wood crap right now. Not with this stuff going on. I'm telling you, these high flying, high multiple tech stocks in an age of austerity, in an age of tightening monetary conditions, they're not going to do well. Everybody's trying to forecast the Fed pivot right now. I'll believe it when I see it. So, all right, guys, we are going to wrap it up there. And again, I just want to say, go back, check out that Super Bowl commercial. Also, I want to send a shout out to my Patreon supporters. Thank you guys for everything you do for for the channel, both your support and your questions and your ideas. Looking forward to talking to you guys tomorrow on our Zoom call that we do every Wednesday. Thank you to Mish for your services. Thank you to all my blue wrenches who are keeping things neat and tidy in the chat. Thanks, Mom and Dad, who are in the next room. We're going to go out and get breakfast now. Mish, you got anything you want to add?
Hey, remember, if you can locate me in the wild, I'll give you a mark. I always have a roll of marks in my pocket.
All right, spot Mission in the Wild. Get yourself a Merc dime. And until next time, live small and dream big.